So let's also now listen in to India's Chief Economic Advisor, Subramanian, who was speaking on the outbreak and also the impact that the coronavirus infections have had on the global markets.
On the economy that have come in the last few days, and then explain the reason for what we're seeing in the markets. In my view, the current developments in the markets are all related to global factors. I think if we actually look at the number of countries that have had a huge decline in their stock prices since the 31st of January. If we look at the period from 31st of January to the 12th of March, these countries, all these countries, Russia, Brazil, France, Germany, Argentina, UK, US and Japan, all these countries have had more than a 20% decline in their stock prices, in the stock markets, and India is actually is below them. So firstly, what we are seeing currently is actually a reflection of some of the global factors related to the coronavirus episode. Now, what I want to actually point out is on various aspects relating to the Indian economy. First, the CPI inflation print that came yesterday. The inflation was 6.6% year on year, which is much lower than the consensus estimates. In particular, the decline in the inflation was because of the decline in vegetable prices. Earlier I had actually explained that the reason that the headline inflation was higher than core was because of food prices, and as we had predicted that we should expect the headline to start coming down in March, that has started happening. So by July, as I had mentioned, the headline should come back to core. Core inflation itself has also decreased from 4.2% to 3.9%. What is also very important to note in the context of inflation is that after 1.5 years of the rural inflation being lower than urban inflation, for both January and February now, rural inflation is actually higher than urban inflation, which means basically